All right, let's get right into it. There's a ton of new optimism swirling around Ethereum right now, and today we're going to break down the two major forces behind it all. The entire digital asset world is buzzing, but this isn't just random speculation. We're talking about some really deep-seated shifts happening in finance.
And this is the number that's got everyone talking, $2,500. It's the price target that Ether bulls are zeroing in on, and believe me, it has grabbed the attention of the entire market. It's a huge signal of just how bullish the sentiment is right now.
So it's one thing to see a big number like that, but it's crucial to look past it and really understand the why behind it. What fundamental changes are actually happening that could justify this kind of target?
Well, this isn't just market hype. The excitement is really being driven by two very specific, very concrete developments that are building this powerful bridge to traditional finance. What we're seeing is the crypto space really starting to mature, It's moving from being a niche interest to a legitimate part of the global financial system.
Okay, so let's dive into that first driver. It's basically a new on-ramp for the big institutional money, and it's all happening through something called a staking ETF.
First, just a super quick refresher. An ETF is a tool that's been used in traditional finance forever. It lets investors buy into an asset, like gold, or in this case, Ether, through a regulated product they can trade just like a regular stock. And that keyword staking, well, that just means locking up your crypto to help secure the network, and in return, you get rewards. Now here's where it gets really interesting, the crucial difference. A standard crypto ETF, it just gives you exposure to the price. But a staking ETF, this is a total game changer. It doesn't just sit on the Ether, it actually puts it to work, passing those network staking rewards directly on to the investors. So think of it like a yield-bearing asset, but it's all wrapped up in a familiar, regulated package.
And this is a huge deal. When a financial giant like BlackRock, a firm that manages trillions of dollars, gets into this game, it's not just another product launch. It's a massive signal to the whole market. It legitimizes these DeFi yield strategies and basically turns them into a brand new frontier for mainstream investors to get returns.
The impact here is just massive. It creates this regulated gateway for pension funds, for hedge funds, for corporate treasuries, all this capital that was just sitting on the sidelines before. And that kind of large-scale, stable injection of money is exactly what analysts are looking at when they start throwing around targets like $2,500.
So that's just the first force. The second one? It builds an even bigger bridge between the digital world and the physical one. We are talking about real-world assets, or RWAs.
The concept here is actually pretty simple, but it is incredibly powerful. You take something that exists in the real world, say a building, a government bond, a piece of fine art, and you create a digital representation of it, a token that actually lives on the blockchain.
And the process itself is really straightforward. You identify an asset, you tokenize it on Ethereum, and boom, suddenly that illiquid physical thing becomes a liquid, programmable digital asset. It can be traded 24/7, you can split it into tiny fractions, or even use it as collateral to secure a loan.
And make no mistake, this isn't just some small experiment. This represents a fundamental shift in how finance works. The goal here is to unlock the trillions of dollars that are currently just locked up in illiquid assets, things like real estate and private equity, and make them more transparent, efficient, and honestly, more accessible to everybody.
Okay, so what does all this actually mean for businesses? For the future of finance? Why does it matter?
Well, the benefits are really compelling. Just think about a typical commercial real estate deal. That can take weeks of paperwork and legal fees, right? By tokenizing that property, that whole transaction could be settled in minutes, with way lower costs and perfect transparency. And high-value assets, like that building, can now be opened up to a much broader pool of investors because of fractional ownership.
And listen, this isn't just a theory. We're actually seeing some of the world's most conservative, long-term investors. I'm talking about major university endowments starting to shift their strategies. Their move into this space is a powerful vote of confidence. It means digital assets aren't just for speculation anymore. They're becoming a core part of sophisticated, diversified portfolios. So you've got institutional money pouring in through ETFs on one side, and you've got real-world value being brought on-chain with RWAs on the other. These two forces aren't just happening in a vacuum. They are the essential financial building blocks for what comes next, the next evolution of the internet, which people are calling Web 3.
The whole idea behind Web 3 is a shift away from an internet that's controlled by just a few huge companies toward one that's more open and actually empowers individuals. But to make that vision a reality, you need a whole new financial infrastructure. Staking ETFs provide the liquidity, and RWAs provide the tangible value to build it on.
But, while the future looks incredibly bright, it is so important to be realistic. The path forward has both these incredible opportunities and some very real challenges.
On one hand, the opportunities for businesses, entrepreneurs, and investors to create value are just immense. But on the other hand, everyone involved has to be clear-eyed about the hurdles. Regulatory frameworks are still playing catch-up, the market is still volatile, and the technology itself is still brand new and constantly evolving. So when you put it all together, with institutional giants launching compliant investment products and real-world value being tokenized on-chain, we're left with a really big question. Are these the first major steps toward the future where traditional finance and the decentralized web finally become one single integrated system? That is the multi-trillion-dollar question we're all going to see answered in the coming years.